Hey guys, what's up? Spenny here. So in today's video, we gotta talk about Alibaba. The Chinese government is cracking down on them, and I'm hearing a lot of different POVs that people are gonna sell out. They think that Alibaba is doomed. I have a very opposite opinion to that. I think this is representing an amazing buying opportunity. I am currently invested into Alibaba, and come Monday morning, I'm gonna be loading up a lot more shares, and if this continues to dip, I'm gonna continue to buy. And so in this video, I'm gonna explain to you why I'm gonna buy. I'm gonna show you the valuation on this company. It is very cheap right now, and I think we could see massive upside once this blows over. And I do think this is all gonna blow over, and I'll tell you guys in this video for my reasons. So let's get straight into this video. Okay guys, so first thing to look at here, you can see that Alibaba over this past year hasn't moved. A year ago it was trading at $226, now it's $222. We've seen barely any upside, and this is because of this whole government cracking down on Alibaba. There's a lot of fear in the market, and I think this fear isn't actually fully justified. I think this is just an amazing buying opportunity. We all know the Warren Buffett quote. I'm not gonna say it. So let me just show you guys what I'm talking about here though. So you guys can see here that 22 analysts are saying that this stock is a buy. The average target is $338. The high forecast is 365 and the low is 290. No matter how you look at this, there's a lot of upside on Alibaba, and I think it's extremely cheap right now. The only reason why it is this below its fair value is because of fear, and the thing is, this fear is not justified, guys. The government is not going to destroy Alibaba. I'm going to show you guys why in a second, but let's keep on looking at its valuation. So Alibaba has performed amazing over this past year, even though its share price hasn't moved. If we look here back in September of 2019, they brought in 119 billion. And then if we fast forward to September of 2020, we brought in 155 billion. That's a 40 billion increase, which is absolutely massive, but its share price hasn't moved, and it's just because of fear. And if we look at more traditional methods to value this company, if we check out the price to sales ratio, you can see that back in between 2017 and 2018, it used to trade at a 20 PS ratio. That climbed down and it hit a floor of about 6. 6 is the absolute lowest the stock has ever traded at. Right now, we're around a 7 price to sales ratio. Guys, this company should not be trading this low. This, to me, is a floor on this stock. Yes, it could go below the 6 or 7 range, but if it does, it's nothing more than an amazing buying opportunity. Like, that to me is screaming buy. This is easy money. The government's not gonna destroy Alibaba. So what I'm gonna do, guys, I'm gonna play this 2-minute clip for you where they talk about the reasons why the Chinese government is investigating Alibaba. And then we're gonna talk about those reasons, and I'm gonna show you guys some very bullish points. Many other very famed investors are currently heavily invested in Alibaba. This is going to help bring you guys some more confidence. So let's get into this clip.
Good morning, Andrew. So today, the country's top market regulator said that it's opening an investigation into Alibaba for alleged monopolistic behavior, what's known, especially here as a common practice, as pick one of two. So this is forcing merchants to work only with the e-commerce giant as opposed to any of its rivals. Separately, Ant Group was called in for a discussion, summoned to talk about fair competition and consumer protection. So all of these moves come at a time when Jack Ma, only a couple of months ago, had made a fiery speech where he was highly critical of the regulators, and also at a time when Beijing, and in particular the Xi Jinping administration, is looking to exert more control over private industry, ostensibly to weed out some systemic risk. So there's been a lot of talk now today about what the potential impact could be on Chinese tech. Most people here are saying that they expect the enforcement to come into play, that a lot of the larger Chinese tech companies are going to face several potential penalties, such as everything from slap on the wrist fines to demands for restructuring of their business model. And then the nightmare scenario that's been discussed is a possibility to the end of the VIE structure, which is a structure that allows foreign investors to buy into some of these Chinese tech firms. So a lot of discussion here, a lot of concern. But one thing that is the saving grace, at least discussed here among Chinese tech folks, is that these Chinese tech companies, at the end of the day, are important to Beijing because Beijing wants to have national champions. And we saw that reflected in the state press when the official People's Daily, very soon after this announcement came out, had written up how, though it's in favor of this investigation, that the purpose of the investigation is only to have better development of the online economy as opposed to anything else.
Okay, guys. So I don't know why people are freaking out about this. This shouldn't be a surprise. Alibaba's practice of pick one of two is absolutely way overbearing in power. That is an unacceptable business practice, and as a government, the Chinese government has a responsibility to crack down on that. That's no different of what's going on in the United States right now. Look at Amazon, Apple, Facebook. These companies are all being investigated by our own government. You don't need to be a communist government to investigate this kind of business practice. Governments don't want to see monopolies. Yes, it's great for investing in. They're amazing stocks to make a ton of money, but this is an unfair business practice. So this shouldn't be a surprise at all that Alibaba is being investigated for this. I'd be more concerned if the Chinese government was going after them for something that didn't make any sense. This makes sense to me though. I don't know how someone can argue that this isn't a fair practice. So to me, people are blowing this out of proportion. The Chinese government should actually be investigating Alibaba for this. If we look at this little tweet here, it says the worst case scenario for Alibaba would be restrictions on its business practices or perhaps even an attempt to break up the company, but I think that's unlikely. I would say that's unbelievably unlikely, like less than a 1% chance of happening. And as far as putting restrictions on their business practices, well, I don't think that's actually a very bad scenario. The CCP should put restrictions on these kind of business practices. You should not be able to force people to sell on only your platform alone. If the government did that to Alibaba, it wouldn't destroy their company at all. Alibaba would still be wildly successful. So this worst case scenario really isn't that bad in reality. And I don't think I'm the only one who's thinking that this is really a great buying opportunity and people are way overreacting. If we look at ARK here, ARK has bought over 200,000 shares of Tencent the day Alibaba dropped, which is just a couple days ago. I realize this isn't Alibaba, but Tencent is another giant company in China that is being looked into by the CCP as well. So this really shows to me that ARK isn't all that worried about the CCP destroying these big Chinese companies. I think that the CCP should be regulating Alibaba. And the situation that I see happening is that they're going to be nailed with a big fine. They're not going to be allowed to do this practice anymore, and maybe some more restrictions on different monopoly-like practices. I don't know for sure what that would look like, but as far as breaking up their company, I don't think that's a risk personally. And as far as Chinese companies ever being delisted off of the US stock exchanges because of them not being audited correctly, this was a scare that's been going on the past few months where they have to abide to American auditors. I think that's not going to be an issue either. A lot of these Chinese companies are already being audited by approved companies. So again, I don't think they're going to be delisted. I don't think this is an unreasonable thing that the CPP is investigating. And if we also look at Ray Dalio's fund, Bridgewater Associates, this is the biggest hedge fund in the world. Ray Dalio knows more about China than probably any other investor out there in today's age. This guy has done several interviews talking about how he's extremely bullish on China, and he's heavily invested into Alibaba. It says here that Bridgewater Associates, the world's largest hedge fund that oversees 150 billion in assets under management, bought 15.7 million worth of Alibaba shares during the second quarter. This guy is buying up shares, and if I saw him sell all of his Alibaba shares after this whole announcement, that would concern me greatly. But I really doubt we're going to see that. And I think that we're actually going to see ARK, Bridgewater Associates load up on these shares. That doesn't mean I don't think there is downside right now. There's a lot of downward pressure on the stock because the fear only just started last trading day. I think we could easily drop down to $200 a share, maybe even below that. But what I plan on doing on Monday, the next trading day, is I'm gonna buy a lot more Alibaba shares around this $220 price rat. And then if I see it dip down to anywhere around $200, I'm buying more. If it goes lower than that, I'm buying more. I'm gonna keep on adding to my position because I think within the next 2 years, Alibaba is gonna be a $400 stock. And this isn't that risky of a play. They're a mega cap company. They are the #1 e-commerce company in the world. The only risk right now that people are worried about is the CCP. And for the reasons I've explained earlier, I think that is reasonable. They're investigating Alibaba for the 1 and 2 practice. I think that it's very monopolistic and it shouldn't be a business practice that's allowed anyways. Maybe they have some kind of vendetta with Jack Ma. I can't say that for sure. I think that's mostly speculation. But as far as them breaking up Alibaba, that would be a really big deal. And that would scare away American investors from probably all Chinese companies. So I don't think they would do that. I'd be really bold of them. But anyways, guys, if you found this video informative, make sure to drop it a big thumbs up. And if you want to see more content like this, make sure you hit the subscribe button as well. I do post stock videos every day of the week. And thanks for watching until the end. I really appreciate that, guys. I'll see you on the next one.